So my idea is to have as much information as possible and then understand which information is not important and then eliminate that. So from a very long period of time, I've been tracking a very large number of markets. So because you've asked what is the reason behind Netra and Tathya, I'll give you a brief background on. So when I was a trader, I used to trade for a proprietary desk. I had a screen which had each and every stock defined by the sector listed on a single Excel sheet, which I had connected to the live market. And the same Excel workbook had same sheet for different countries. So for example, one sheet was for India, then for US, and every sheet had equity markets, bond markets, currency markets, and commodities was, one single sheet. FX and commodities was one single sheet. So the reason for having such a overdose of information was that I'm always looking at what is going wrong or what is going wrong right somewhere in the world. I think that is something which allows you to learn a lot more, right? So for example, even today, when I look at markets early morning, I track about 50 markets on a daily closing basis globally. And I'm not really interested in markets which closed 0.5% or 0.1% here and there, right? I am interested in understanding the outliers, what's happening in one specific market. And then I will go back and find out what went wrong or what went right. And then I will go back and see the primary data regarding that market. What was the important economic data released or earnings released or whatever has happened with the underlying data for that specific market. I think this is the backend linkage that I have created over time, because macroeconomics as a subject is very subjective and often misused. The term is often misused to mean that you make forecast about GDP and inflation and all that, which I think is just forecasting. It's not macro, right? There are many other aspects to look at it. So I have tried to build my own understanding from markets to data, not the other way around, right? And what will impact the market is very, very important. So it's like a circular reasoning. So that is the beginning. And for Netra and for Tathya specifically is just a compendium of indicators that we track. So there are about 50 indicators in Tathya, and we've divided into various parts, one which tracks the demand of the economy, one which tracks the industry or the manufacturing sector, one which tracks services, the external sector, the monetary sector, all these various sections that we've created. And why we have created these sections is to understand or club together certain parts of the economy, right? The question was why these reports, so first and foremost thing is that it's very, very important to know the history of the data. So all these data points that we show, in Tathya report, we show 1 year data, the year-on-year change. We have this data going back as much as it is possible. Whenever it was started in India, we have the data from that day onwards, right? And we have both the YOY change and the base data. And second and more important thing is, for many of these reports, I type that data manually with my hands in the Excel sheet. I have access to many data services because I work in an institution setup. So whatever data sources that you can think of, I have access to them. But in spite of that, I type that data by my hand, and I try to go to the original source, which is freely available on the internet, so that I can seek data there, look at that data, and then type it in my Excel sheet. And it's a tedious activity, but what it does is it allows me to remember that data. And another kink, which I'll tell you, which is very different. Today, people don't like to remember numbers because they are easily accessible on the internet or on your mobile phone, right? But I believe in remembering each and every data point that I'm typing. So I would want to remember what was the GST collection in 2018, 19, 20, which month inflation was higher, lower, what was it in 2005, right? So punching data allows me to create a history. And you could say Tathya is a expression of that data. We created this expression so that we can internally track that data. Usually what we do is that once Tathya is released, we take a color printout and put it on our desk. And it's always in front of me. So that reinforcement continues. Second and more important use is to interact with fund managers and tell them what's happening with high frequency data. And why it is important, because there are many narratives today. For example, in April 22, internally, I told my team that there are certain initial signs that Indian economy might be diverging. Our growth is not tapering, but there are signs that global growth is slowing down or probably peaking out. And there could be some divergence. And I told them that over the next 6 months, it's quite possible that a lot of us will talk about divergence in economic growth or decoupling or whatever those numbers are. Even today, when you speak to people, many of them are telling you that there is a slowdown happening or India may slow down ho jayega. But till today, we haven't seen them in numbers. We haven't seen that slowdown in numbers, whichever economic data you capture. And that is precisely where a report like Tathya comes in. It's there in front of you on your screen. If you have any question about whether data is slowing down or quickening or accelerating, you can just have a look at it and it will give you a very precise measurement of what's happening. Case number 3 is that we have used many of these data points in conjunction with our quantitative investment analysis team. And we have given them a framework for using these macro data points and linking them to sectors. So for example, how do you link credit to industry, housing loan numbers, and then you go down to housing loans within the credit growth, you go down to housing loans, and then you find out what's happening with the real estate sector, right? For example, you look at auto numbers, which Siam comes out with. How do you correlate it with what's happening with credit growth, right? You can get credit growth for vehicles. How do you correlate these two numbers? And then you put in, for example, in Tathya, there is a matrix where you talk about the volume of petroleum products consumed, right? The sales volume. That is again a complementary indicator, right? The problem is that a lot of people who will do a statistical analysis with this data will find no significance at all, right? And I think that is the beauty of this analysis, that जब आप Excel पे इसको करते हो तो कुछ दिखता ही नहीं है. It doesn't work, right? The big problem is that the context is missing. So when we look at the historical data, many people won't realize that what happened in 2020. So when you are sitting in 2030 and people who will analyze COVID data, they will not know what happened in March or in April, right? But the data set that I have created, it goes back to so long, and I have by month comments in those data sections. For example, what happened in September 2008, right? How did markets bottom out? I was sitting trading live at that point in time. So I have those comments and that memory which I have built into data, which helps you understand these data points better. So it's you could say that it is a build-up over a period of time, and that is how it helps. I think it's quite a long answer, but that is how it is, the construction. And Netra is a very simplistic visualization of data points. It's initially I thought that that report should not be a opinion piece, and I have tried to keep it that way. The only problem is that it gets interpreted as an opinion, that as a forecast, but it is not. It tells you that what is the most high probability scenario, and those scenarios may or may not happen, right? It's anybody's guess. But where do you stack up versus the history? And I try to put the context in Netra, Tathya, I don't put any comments or remarks. Ankita prepares that report. But in Netra, we put a lot of qualitative comments saying that how do we see this data? What is more important? And I think that is what it is. So it's a very simple visual interpretation on how to look at data and how to interpret it. I think this is about both the reports.
Thanks, Sahil. This is very elaborative. And actually, Netra even for us, it is easier to understand because most of the charts I have seen, there is a lot of historic context. Like if I talk of the banking cycle, when you published some 7-8 months back, you went 30 years in the history, showing when the credit growth bottomed and how it reversed, and this is the third occasion. But if we come to Tathya, in Tathya, there is a lot of data. And what we get is YOY and all. But let me just show you for everybody's benefit. Let me share a Tathya screen. So like this is one of the sample reports. So 2-3 questions we have. One, there are so many metric, and not always all the metric will be telling the same story. One metric will be telling good, other will be telling bad. So I don't know if it is possible or easier, but if we have to focus on top 5 metric from market perspective, what will be those metric? That is question number 1. And 2, if you can take 2-3 more examples and explain how these reports were helping in market decision making in last 3-4 years, that would be also very, very helpful.
Sure. So, Saurabh, every time I think there are different 5 indicators which will be important. And that will depend on what is the context of growth or what is the context of slowdown in the economy right now. I think those will be the most important numbers. And for example, if you were to look at the current period, what are the numbers that I would want to look at right now? So probably non-oil imports, petroleum consumption, mobility numbers is something that you can even delete from this report right now.
So I don't know if it is easier to reply, but if you can take a shot on in which kind of scenario, what is the data we should look at, if it can be framed in 3-4 scenarios.
Sure. So I think one very important scenario is where you are worried about growth, whether growth is slowing down or quickening. At that point, you have to pay a lot more focus on demand side indicators, which is the table number 1. And these indicators will become very, very relevant. Along with that, you will have to look at PMI numbers. So your first block is, demand, where all these indicators come in. And within that table, there are, let's say, 2-3 indicators, as I said, petroleum consumption. Now, why is it important? Petroleum consumption, the number that is shown here is in volume, right? It's the volume of fuel consumed, irrespective of the price. So it is devoid of inflation effect to some extent, right? Because in India, the demand for energy is very, very price inelastic. It doesn't really change. So this number grows very, very closely with GDP. So if you want to understand how month on month growth is panning out, this is a very good indicator to look at. Second is non-oil imports. Again, a large amount of India consumption plays out through imports. So if you remove oil effects, because you've already taken effects of fuel in POL, you get a very good sense of how domestic demand is panning out, right? And third, and another very, very important indicator is personal loans. This is again an indicator which tells you how consumption demand is panning out, because if you take 100 rupees of India's GDP, between 56 to 60, depending on which quarter you're talking about, comes only from private consumption. So this is the large part of our economy. So as I said, when you are worried about growth, look at these indicators, right? And if you are bifurcating between rural and urban economy, then probably you go to what I have pointed here, rural wage growth. You can also go back to then look at HUL numbers, then look at numbers from other FMCG players, look at numbers from two-wheeler players, which data is already there, two-wheelers sales number, right? So these numbers will tell you what's happening in that part of the economy.
Sahil, one request, and I don't know if it is possible, but the numbers are always relative. If we see this number, we don't know if it is good or bad. I don't know if it is possible to add some kind of historical benchmarking so that we know that 5% is a good number, because historically rural has grown at 3%. But if it is 7%, so if there is a possibility to add just a feedback, I think that
we can do that. Yeah. No, it's a good and important point. Saurabh, I'll tell you one thing why I have not added it. I'll tell you that there are a lot of things that we can do and which will make it more simpler. And I'll try to do that. But there are things that I don't do for a reason. I don't simplify them for a reason, because I feel that if you spoon feed the reader too much, then you are probably underestimating the reader himself, right? And I think people are very smart. If they follow you for a period of time and if they follow data, they create context. So that is one of the reasons why I don't put a lot of these numbers, but I think the point is taken. We could put long-term averages, which will give you a flavor of where this data point is. But again, it is very contextual, as you said, right? So for example, in 2021, for a very long period of time, we started putting 3-year CAGRs in this report, 2-year CAGR and 3-year CAGR. If you go back and download those reports, they had 2-year or 3-year CAGR because YOY numbers were just completely off the charts. Even in this report, if you see June 21, because of April, May, June second wave, those numbers are completely off, right? So knowing the context again becomes very, very important. That is one of the reasons. But yeah, the point is taken. I'll try to put that. So one was this demand side, which is very, very important. And then probably if you go to, let's say down, there is an external segment which talks about the external sector, right? Which is the second last table, external sector and flows. So if there are problems with the external sector, what is external sector? India's trade numbers or the FPI flows, or how are we panning, how is our balance of payment panning out? All those numbers, how is the currency getting impacted? They are captured in the last two tables. And I think most of these all of these indicators are important. You don't really drop any one of them. At best, you could probably look at trade deficit and services exports more closely, and REAR, which is real effective exchange rates, these numbers more closely. But again, all are these numbers. You need to know the story behind them, why these numbers are where they are. I think that is something. So for example, you asked me the context, जैसे अगर आप FY 13-14 में जाओगे, India's trade deficit had become 10% of GDP, which was extremely large. And this time also we went to 8 to 9%. But at that point in time, our services was not big enough to give us a cushion. Our remittances were not big enough to give us a cushion. This time they are slightly higher to cushion us from let's say 9% kind of trade deficit, and we were able to sort of traverse that path, right? So this is again an external area where you look at. Then when you see that the bond market is under trouble because of government borrowing, you use the fiscal box, where you are worried about what's happening with the government borrowing or interest rates, the interaction between monetary policy and fiscal policy. So this is fiscal and monetary table that you use together, right? So either of the two. And, there is, I'll tell you a secret. So we are trying to write a book about macroeconomic indicators, which should be purely into Indian context, right? And why we are attempting such a feat is a lot of people look at this data and they try to learn from this data. But what many people don't understand is how this data is collected and who collects this data and what questions do they ask? Who do they ask these questions to, right? I think those are the contexts which are missing. I think hardly maybe 1 or 2% people in India know that because that information is not really sought or available very easily. So I think that is something which, if you are really serious about understanding these numbers, that is the information that you should seek, right? For example, if you look at this housing loan within the services segment, where does this number come from? If RBI releases this data every fortnight, every month, this number is updated from RBI data set. And how do you triangulate this number with what HDFC Limited is reporting, right? Or other housing finance, Canfin Homes and others are reporting. Do their consolidated number also show what this number is showing? I think these are the things which you have to triangulate. Once you triangulate these numbers, the idea is that you can burst a number of myths in live markets. Okay, so for example, when you see data flashing on your screen that XYZ company has shown a credit growth of 20%, how do you make an assessment whether it is good or bad, right? So once you know these data points, you can make that assessment within the first 5 seconds. You don't have to look at or open any Excel sheet or a research report or talk to an analyst. You don't have to do that. So I think that is the context. And I want to also tell you possibly an endeavor which I have tried to do. So there is a lot of excitement globally around getting algos and quants and systems to analyze data for you and give you a actionable input, right? Then you can decide on that input. So what I try to do is that I try to assimilate and remember all these data points in my head so that I can become part of that algo. So I am not different from the machine, so that my mind is working in consonance with the system. And that is how I interpret it. So I think that is it. So these are some of the scenarios you can use them. And then, of course, there is an interlinkage between each one of them. For example, a monetary policy cannot run devoid of a fiscal policy. They move together.
Even the demand and services, do you think they are interconnected? Because if you look...
Absolutely. Yeah, absolutely. Because services is the largest part of our economy. So again, when you look at demand, you have to look at services. Specifically, the credit to services is a very, very important indicator. Airport passenger traffic, all of that are important indicators.
Okay. And a few questions I had, like sometimes what you present here and what you hear in terms of media, if they are not in sync, like here I see there is one slide from one of the presentations that semiconductor, it's a structural theme. But I have not tracked closely, but the sense I got, some of the global companies in consumer electronics, the results were not good and looks like demand is an issue. So how do you look at it, temporary versus long term, and how does this data helps? Or do you also go through this kind of period where you feel what you analyze and what is there in the market, they are not in sync?
Yeah, there are a lot of times I think that our expectations may or may not play out in the market. And there is, as you said, big difference between a structural theme and short-term aberration, right? And you have to be very clear what are structural themes, what are the things where there is a long-term trend which is in favor and how strong that trend is. And sort of there are no easy answers, to be very frank with you. What I do is that I'll tell you very frankly that I read a lot. At any point in time over a 6 months period, I read a book from biology, then a book from physics, then a book from chemistry, then a book from investing. And I try to gauge what are the trends which are happening in each of those industries, right? Because I want to have a global picture of what's going on globally. So for example, the chart that is there on your screen, which is the semiconductors. Now there is a very simple change which has occurred. I'll tell you, and I'll try to marry that with live market data. So if you look at Intel is one of the most profitable companies in the world. A lot of people will give an arm to have the profitability that Intel has, but its stock is still below the peak that it made in 2000, right? It hasn't gone up. And if you compare that to NVIDIA, there is a marked outperformance for NVIDIA. And the reason is simple, that Intel has completely missed making chips for mobile phones, right? And NVIDIA has taken a leap, gone to video games and all the other stuff. I think you already understand all of this. Now, the question is that what will happen in the next 10 years? So there are two very clear trends. One is that the old chips that x86 framework that laptops use or Intel uses is very fast giving way to GPU chips, right? And graphic processing unit, which can calculate at a much faster pace and render images also, right? So mobile phones, and now you have Chromebook and you have Apple Android, which are at a very fast pace replacing their old chips with GPUs. And second and more important trend, that 5G is coming. And 5G is a fundamentally different technology than 4G, right? What it does is that in today's technology in 4G, signal goes to the receiving tower and then it is blasted off. And from my device, it will go as an encrypted signal. If it is meant for you, it will go in all directions. Your device will decrypt it and you will receive the signal. In 5G, it is very different. The signal which is meant for you will only go to you. So the efficiency is extremely large and the hardware that is required to be used is very different. So a 5G phone is different from a 4G phone. A 5G laptop which can assimilate that signal is very, very different. So this shift is going to occur in the next 2 to 5 years at various stages in various countries. And the speed that these devices will have, the capacity, the computing power that the devices will have is in multiples from where we stand today. Whatever stock market do right now, whether it, these stocks become expensive or cheap, this trend is not going away. It's an entrenched trend and it is progressing in the right direction. So I know that this is a structural story. How do I play it? I want to play it only when it becomes, when I respect valuations. So for example, in one of our strategies that we were doing, global strategies, we had a semiconductor index where we reduced our weightages drastically when the index was at a 4,000, 3,500 level. And then we raised active weights in semiconductors when it hit 2,000. And then I think it is up 50, 60% from that level. So what we want to do is we want to use these structural trend to our favor. And how do you use that in your favor? When you see that valuations have again come back to places where the margin of safety is very high. And you will get those trends only when you have clarity over the longer term. For example, there is another longer term trend where the common domestic or international antibiotics market in healthcare will get changed and a gene therapy market will get constructed over the next 10, 20 years, right? So we know that there is a trend. How do we play that? Right now, we have a partly 1.7% weight to play that market because we know that it is a binary call. One company will become $1 billion enterprise or it will become zero. But we know that there is a trend and we are very open to them. So we analyze hundreds of companies in each of these baskets and then try and ascertain which can, stand the test of time. So this is how I look at it. And this is market after market, sector after sector that we try and ascertain whether the theme is tactical, whether it is structural. If it is structural, take a look at valuations. If it is tactical, again, go back and see the market cycle and the valuation both put together and then take a measured call.
Let me go through some of the questions. So on domestic, members had a lot of questions.
Yeah.
One is, and I think you showed some of the rural numbers also. How do you see the current urban versus rural demand shaping up? And what is, I think you dealt where to track.
Yeah.
Yeah. So these are the questions. Maybe you can just hand
Sure. Sure. So I think the best way to track rural economy again is there are 2-3 clear data points. One is, of course, the rural wage number, which is published by MOSPI and RBI. You look at that number, it comes with a 2-month lag. So you can't really help it. Second is something which is not there in Tathya right now, but which is called Manrega work demanded, which is something that is very important. So under the Mahatma Gandhi National Employment Guarantee Act, Manrega, there is a data set which is produced where it tells you how many people or how many households have asked for work demanded, right? That's a very important metric because if that number goes up, that means there is some stress in the rural economy. So that number is falling for the last 6 months now. Third and very, very important is to look at two-wheeler sales and the commentary from these guys for rural India. Fourth is to look at FMCG majors and listen to their commentary and look at their volume growth numbers, specifically what's happening in the rural part of the economy. And fifth and another important segment is CMI publishes data in terms of employment and it bifurcates between what's happening in urban and rural India. That is again an indication. You have to take it with a pinch of salt because the data sets are limited in scope. These are a few data points. Plus, you can also, on an overall basis, also have a primary data set where you actually can call up people in rural India and find out what's happening. It's very anecdotal, but sometimes you get very good trends. So, for example, when you want to track agri prices, so there is a daily price update which happens on data, right? So you can track prices of potato, onions, all of that on a daily basis. It's available. The government gives that number. You can track the progress of monsoon. You can track the progress of Kharif and Rabi season, right? You can track the progress of how many lakes and water reservoirs are full, by what extent, what is the sowing number. All these numbers are available on season to season basis, and they are updated either daily or weekly, right? So you can track all of them. Once you track this data, I don't think it's very difficult to ascertain what is the trend. If you ask me today, the trend is improving. So for a very long time, even if you go back, we would have written in some of our reports that there is a K-shaped recovery, that rural economy is not recovering and only urban economy is recovering. Right now, there is a sense that even rural economy has begun to recover. And we often go back and try to confirm that with the management commentary, whether they are saying the same thing or not. So I think in this result season, there are some players who have started to say that. So GCPL said that in this season. HUL was a little sanguine about it. So there are certain signs that even corporate commentary is changing, but we prefer to look at the primary data a lot more. So this is something that we look at in the rural side. The other is, on one side, a lot of job cuts, but on the other side, real estate doing good sales. How do you see it? Is it peak of real estate cycle? So the answer to the second question is that we are not at peak in India for real estate, because the holy grail of India investment story is real estate. So if you were to ask me कि मुझे सिर्फ एक ही data point चुनना है इंडिया की growth को समझने के लिए, only one data point, it is the total investments done by Indian households in creating what in economics is called dwelling units, or घर जिसको बोलते घर बनाने. That is the single most powerful data point which tells you where and how fast will Indian economy grow. That data peaked in 2011, and it has fallen in as a percentage of GDP in almost all the years since then. And I think post-COVID, we saw the first rise in that number, and that number has just started to pick up. So I guess that if you were to make an assessment where the real estate cycle is going, I think we are at the beginning of a multi-year cycle in real estate. How big or small will it be? I don't know. I have no clue. And second, it does not mean that the cycle will only be in price, like the 2000 or 2007-8 cycle, right? So you have very varied kind of cycles where you will see protected price rise, but volume rise will be very, very high. And in some other, sorry,
yeah, the 2011 one, which ended, when did it start? Was like a 7-8 year cycle, or was it longer?
So it started in about 2002. That was the beginning of the cycle. It took about 9 years. It really accelerated from 2008 onwards, post the crisis. There was a very large acceleration in that. And if you were to ask me why did it just cool off suddenly, very difficult to assess. There are multiple reasons for it. But now we are seeing that for the first time, it is making a comeback. So that is something which is very important. And RBI publishes this data on a quarterly basis. It is available. If you go to the GFCF, gross fixed capital formation within the GDP, it will give you the share of household. And there is that number is available. And you'll see that it has started to inch higher, right? And there are so many implications for building material, paints, and many other sectors that you can derive from that data, and which I think has just started to improve. Second is this job cuts issue. I think it is not just in India, it is global. And how I look at it is that in the aftermath of COVID, a large froth was created in many sectors. It was not only stock prices or unprofitable companies or the number of unicorns which were cropping up, it was also in the employment market. People with 10 lakh rupee salary suddenly started getting packages worth 50-60 lakhs, right? And many of them are now back to 14-15 lakhs. And so that job froth has gone away. And that I think you have to triangulate that with just the froth. And it does not tell you effectively about the real estate cycle, right? So those are two very different things. And another very important thing, India's real estate cycle actually happens in tier 2, tier 3 cities. Although we are only focused about sales of apartments in metro cities, which also is a very important trend because that is where the listed market is. But when you look at the economy, the real estate cycle actually happens in tier 2, tier 3 cities, where actual houses are built, not just apartments. So that is how I see it. What is happening in US and European in IT versus Indian services companies, why they are not reflecting the pain. I think in India, we have seen what do you call a valuation derating. From peak valuations, we have come down. Similarly, for NASDAQ, also the same thing has happened. Second and more important point is that Indian IT services are still sort of a back office, right? They get impacted at the end. That is one of the reasons why that pain is not visible. For their customers, I think they are still okay. They are still seeing some growth. And I'll give you a qualifying data point. So when you split the US economy into two parts, one is the goods economy, the other is the services economy, right? Or you split it into manufacturing and services. The services part of the economy is still growing. It's not degrowing. Maybe the last quarter, December, was the first time where there were signs that it has begun to degrow, but it is still growing. And that is one of the reasons why customers of that segment are yet to feel the pain. And second and more important thing, if you were to do a global assessment of profitability, take all the technology companies. What are technology companies? Companies that sell hardware, software, or services, either of the three. Everything else is not a tech company. For example, Tesla is not a technology company. It's a car company. Apple is now a consumer technology company, not a technology. It doesn't sell technology, right? It sells products, right? So to some extent, maybe a large part of its revenue. So when you look at this complexion, and if you take the last 15 years, X of last 1 year where oil and gas has made a comeback, all the profitability of the world can be given only by technology companies. So all other sectors are purchasing technology to upgrade themselves, and therefore they are not making any money cumulatively. If you put all the sectors together, some are making, some others are making losses. The technology companies who sell technology have compounded their bottom line at 15% CAGR, right? And that is the strongest growth rate for any sector in the world. And that is one of the reasons that this sector has such tremendous tailwinds. The underlying trend is so strong that even when there is a short-term hiccup or short-term business cycle downgrade, they are still able to survive that. And that is the reason that all the other guys put together are still buying technology, whether it is services, hardware, or software, that they are able to withstand any kind of crisis. So I hope I'm able to answer these questions. But even when you look at the fundamentals of Indian companies, there was a margin contraction, which I think went away in this quarter. Most of the companies have reported very stable margins. That was more because of
COVID, I believe. That was not sustainable at all.
Absolutely. So they are now back to pre-COVID margins, and if they can sustain them and the valuations can come down a little bit more, then I think they will again go back to being a structural story. That is how I see it.
And Sahil, even if we go back to recession 2008, because that was another pain period, but even that time, Indian IT companies didn't get impacted in terms of revenue growth, right?
Absolutely, because they were impacted maybe for a quarter or two. And I'll tell you a real data point. In 2008, when this crisis occurred and there was a huge research effort to find out who will get impacted and who won't. And it was very clear that BFSI, which is a very large provider of business to IT companies, will impact the IT sector a lot more. But then I went back to this, looking at this monthly number of services exports from India. It actually grew in the next 12 months. And the same thing repeated in 2020. And I think in about August or October 2020, I told my team, my erstwhile team, that this number is, rather than degrowing, it is actually accelerating. So which is quite unbelievable, and which means that this sector is going to go through the roof, right? And that trend got repeated again, maybe in a different context. But so you can actually look at the macro number and also look at what companies are reporting, and then marry them together to have what you call a confluence of factors.
So that reminds, I did, so I was in EY that time when COVID happened, and there was a hackathon going on in EY. It was a global hackathon on technology. And we built a NLP based tool for, basically it was for financial market. And this is a real thing which we have done. And what we did, we took con call of two extreme sector, hotel sector and IT sector. And we tried to do a con call analysis of the sentiment score. Still, anybody can go and do that analysis. If you will see the sentiment score pre-COVID and post-COVID, in IT sector it improved and hotel it deteriorated, which is easier to see in hindsight. But that just helped me to understand how much data can tell, which usually we don't look at it if we try to triangulate all these things together.
Correct. Absolutely. I think that's very, very important. And we also looked at so many sectors during COVID and try to understand what could be the impact. And there were, of course, trends which were visible. And one of the insights or highlights which I remember very clearly was telling my team that the stimulus that central banks are constituting along with the governments is so large than required that it will cause a very, very large market shift. And I think that stimulus has still not gone away from markets. The numbers are so out of whack that global liquidity is still abundant, although the market commentary has changed, but it is still abundant. And that's why valuations are still very, very sticky and they refuse to fall at a fast pace.
Okay. And I think inflation is something where you have been very vocal in terms of, the interest rates coming down and inflation cooling off.
Yes. So Saurabh, for inflation, it's a very tricky animal because it is dependent on so many factors. And there is a lot of theoretical construct which goes into understanding inflation. But at the end of the day, it is nothing but the prices of bunch of articles, right? मतलब मैं कैसे देखता हूँ उसको कि अगर आप ग्रोसरी स्टोर में गए हो और आपने जब अपना कार्ट फिल किया है, अब वो महंगा है कि सस्ता है, that is what inflation is, right? Nothing else. It's very simple construct, but it is made complicated by a number of statistical measures and central bank commentary, etc. So I wrote this report called The Coming Collapse of Inflation and How to Benefit from It. That was released in July 22, when everybody was talking about inflation going up, right? And I wrote this report as a clickbait so that people read it. And the title was not for prediction, but for people to open it and read it. And what we did is we broke up the inflation basket. We saw that कि inflation आता कहाँ से है और वहाँ underlying markets में क्या हो रहा है. So even when you look at, let's say, India basket, अगर 100 रुपए का basket है, 48 food and beverage से आता है. तो जो food inflation है वो इतना volatile है कि इसको कोई predict नहीं कर सकता. And another very important fact is that it is volatile but mean reverting. So a lot of people tell us that अभी onion जो है, प्याज जो है 100 रुपए हो गया है. So inflation is very high. So sometimes I show them an article in 2003 where the erstwhile Vajpayee government fell because of high onion prices, and that article is 100 rupees onion. So it was 100 even in 2003, and even now when there are cycles, it will go to 100 rupees. And that is how it functions. So it mean reverts. So food inflation, 48% of the basket is mostly useless in order to look at longer term inflation. And when you look at the rest of the basket, it's not very difficult to see that two components, which is healthcare, tuition, which is education.
And they grow at 6-7% consistently.
They consistently go higher. And the only three moving parts, which is one, linkages which come because of fuel and housing. These two are the most important components which can move inflation structurally. It can move inflation in a structural manner. It can cause inflationary bubbles or problems. And I can tell you, looking at the data, that we have entered a disinflationary phase from 2015 onwards, and we are still in a disinflationary phase. Although a lot of people will not believe it because there is such a hula baloo about inflation going higher. But I think we have structurally lost having higher inflation, which is a very bad thing for an emerging market. We should actually have the levers to have repeated instances of higher inflation. But though all those levers have been coming down, and I hope some of them come back rather than going away. But we are still seeing that these trends are softening, not hardening. So that is how I see it. For example, in this report, we also covered the US market, where we spoke about how inflation data is bunched up in rentals and housing market and other aspect. And I'll tell you one data point which not many people know, that 25% of US CPI is collected by calling up people and asking them what will be the rentals. And these people are like you and me. For example, if somebody were to call you from the government today, who serve the agencies, and ask you कि आप rent कितना बढ़ाओगे अगले महीने, आप क्या आंसर दोगे?
Of course, on the higher side.
पिछले महीने दिया था. मतलब the answer will not be dramatically different, right? They are real people and they have recency bias, and these numbers change so slowly that there is a 6 months lag between what is reported and what's happening in the real economy.
Also, it can be very micro market focused. Like in Bangalore, actually, in last 6 months, the rentals have gone up by 20-25%. Anybody you ask. Whereas I don't know if other parts it will be same. So how
absolutely. So these data points are very, very qualitative driven, and we looked at each data point. We looked at the inventory of the rental market and how fast will it change. And I had put a few comments on Twitter where Jerome Powell, in I think a month and a half back, spoke exactly about this issue, that how the rental inventory, which will come up for renewal, will see that rates will fall and inflation will fall. And second, and the more important aspect about inflation is how do people interpret it. So a lot of people believe that what Jerome Powell is saying is the truth. And many people don't know that the central banks use their language as forward guidance. So I'll tell you a very, very important snippet which I remember in 2008, 2009 to be precise. There was a press conference where Ben Bernanke was the speaker, and the journalist asked him that why do you think quantitative easing will succeed? And he said that we want asset prices to go higher. And this line is enough for you to understand that the central bank will not allow asset prices, including equity markets, to fall. And he is giving you a clear forward guidance. He is telling you to buy stocks. And people interpreted it saying that he will wait for asset prices to go up. And I remember a lot of commentary, people just brushed aside quantitative easing and saying that it will never work. And it did what it did over a long period of time. And now when they hear central banks say a specific thing, that inflation is high, it is going to be entrenched, it is, we are far away, they use all these commentary to make financial conditions move in a certain direction. And they can change their commentary overnight. And I think we are just one data point away from most central banks to turn on their head and say that we are going to be fence sitters. We are not going to act for a very long time now, and we'll see how data comes. I think we are just one data point away from that. One bad economic data point, for example, there is going to be retail sales data in US. Either this month or next month, it's probably going to soften up, which will cause this narrative to change. That's how I see it.
Got it. And on the budget, like I think some of the things we have seen, like very high allocation to, I think, railway sector. What are your readings of the budget, and from a market perspective, do you see anything interesting?
Saurabh, I've tracked a number of budgets for a very long time, and I can tell you from experience that 99% of all budget numbers are useless. And I'll tell you why. A lot of people discuss fiscal deficit number. You can just change subsidy number by 1 or 2% and change the full fiscal deficit. Just like that. The government does cash accounting. It can just not pay on 31st March and pay on 1st April, and you will see that the numbers will change completely. So it's a very, very subjective exercise. I don't know why so much attention is paid to it. It is an exercise where transparency should be watched very carefully. And I think for the last 2 to 3 budgets, Indian budget has become extremely transparent. They have come out clean on numbers, which I think is very heartening. Second is this expenditure, which I think is a good thing, because capital expenditure is the only thing which matters. So if you take 100 rupees of government expenditure, 73 rupees they spend, they have no way of controlling that expenditure. It is spent on subsidies, salaries, wages, expense that cannot be curtailed. So they are left with just about 27% of the overall budget. So अगर आप overall budget देखो 45 lakh crores का अगर budget है, and if you let's say take 1/4 of it, कि इतना ही उनके पास बचता है, तो 11-12 करोड़ रुपए मैक्सिमम वो खर्च सकते हैं, कुछ 11 lakh crores. That is what they can spend. And उसमें से 10 लाख करोड़ उन्होंने कैपिटल एक्सपेंडिचर पे खर्च दिया, which tells you that the budget is good enough because it is focusing on fixed asset creation. And why is it important? Because a country which is geographically so wide, when you create infrastructure of all kinds, roads, ports, it enables economic activity. And they don't go away very quickly. अगर आप revenue expenditure करते हो, मतलब अगर आपने subsidy दे दी किसी को, राशन दे दिया, चावल दे दिया, it's an expenditure which is like a sunk cost. वो खाली है, खत्म हो गया, right? But on the other hand, when you do fixed asset creation, it works for a very long time. It helps you sweat the asset, what we call when we look at different type of assets. So that is what is good, and this number is now becoming meaningful. तो अगर आप टोटल नंबर देखोगे, स्टेट प्लस PSU प्लस सेंटर, तकरीबन 20 लाख करोड़ का एनुअल एक्सपेंडिचर आ गया अभी केपेक्स पे. 2019 में ये नंबर 7 लाख करोड़ था. So this is the difference which has occurred, which is very large. So I think this will probably go a long way in supporting asset creation in India. And that is one of the reasons why even before the budget, I said that the only number to watch is this number. How big this number is. And I think this is a good enough number in the budget. And there is also this mention of election year budget. Last election year में तो कुछ dramatic नहीं हुआ था 2019 में. बस इतना होता है कि promises काफी सारे होते हैं, but even in 2019 we didn't see anything dramatic.
And how has been the uses of budget year after year? Like, have they utilized like 70%, 75% just to get?
So in the last 2-3 years, the capex number has come closer as a run rate to 89 to 91% of what they've promised. So the run rate has been very good. On the states, it's very less. It's less than 80%. So what they promise, they don't do. But for center, the number has become good. And actually, अगर आपको मैं डेटा बताता हूँ, एक डेटा पॉइंट बताता हूँ आपको, जो अभी हम प्रोग्राम्स देखते हैं मनरेगा और ये फूड सब्सिडी वगैरह, आपको पता है कब बने थे? ये बने थे मनमोहन सिंह जी के टाइम पे, 2004, 5, 6, 7. और ये क्यों बने थे? इंडिया की डायरेक्ट टैक्स कलेक्शन का 5 ईयर केगर 25%. उनके पास इतना टैक्स आ रहा था कि उनको पता ही नहीं था कि क्या करें इसका. There was so much money that they constituted these programs because they had money to do it. Today, we are struggling to have a growth rate of 8 and 12% in most of these numbers. And can we go back to 25%? I don't think so, because you need a very large nominal growth rate to happen. But can we grow at 10-12%? I think we can grow at that number. And that number itself is very strong. आप 6-7 साल में डबल हो जाते हो, right? अगर 12 पे हो तो 6 साल में आप डबल हो जाते हो, which is a good number to have. So I think overall the run rate is fine. Can it be better? It can be better. उसके बहुत सारे रीजन है, स्ट्रक्चरल इश्यूज हैं. वो 1 घंटे में अपने आप में 1 घंटे का सेशन है कि इंडियन इकोनॉमी के साथ क्या क्या प्रॉब्लम्स है, राइट? आई एम गोइंग टू डू अ सेशन इन मार्च on this issue. Maybe I can share a recording later. But I think overall we are okay. We are fine. We are not acting like Surya Kumar Yadav, but we are okay. We are like Chiteshwar Pujara right now. We are steady.
Thanks for explaining it so beautifully and in such a simple manner. Dividing that 100 rupee into different parts. It was really, really insightful. So we'll go from, and I think maybe we have less time. So we'll go from domestic to global. And then there are questions around, again, inflation, US debt ceiling. So maybe you can just have a look at the question and summarize.
Yeah, there is this favorite question about USD losing its default reserve currency status. I think this comes around. I can tell you that people who are new to the market, I have heard this every year in the last 15-20 years I've been in the market. So दो क्वेश्चन है, पहला कि when will USD lose its reserve currency status, और दूसरा ये global judgment day कब आएगा, when all debt will come due and governments will not be able to pay and the world economy will collapse. ये दो सवाल जो है ना, ये मैक्रो इकोनॉमिक्स के, if I may use the term, नौसिखिए बार बार पूछते हैं हर साल, और वो कभी नहीं होता है. उसके पीछे एक रीजन है. उसके पीछे रीजन ये है कि मे बी इसका ड्यू डेट आएगा, जैसे यूएसडी लूजिंग इट्स करंट रिजर्व स्टेटस. ओके, कब आएगा तो मैं भी नहीं जानता. वो क्या वो आ चुका है? आई डोंट थिंक सो. ओके, सो देयर आर टू रीजंस फॉर इट. पहला रीजन दैट ग्लोबल ट्रेड जो है इट हैपेंस इन डॉलर्स. और ग्लोबल ट्रेड में इंपॉर्टेंट क्या है समझना कि अगर आप ग्लोबल ट्रेड का टोटल नंबर देखोगे तकरीबन $24 ट्रिलियन है. 22 से 24 ट्रिलियन डॉलर इज द ग्लोबल ट्रेड. आउट ऑफ दैट 10% इज जस्ट ऑयल एंड गैस. अगर आप ऑयल और गैस को इंक्लूड कर दो 12% के आसपास आएगा कम से कम. वो है एनर्जी मार्केट. ये जो एनर्जी मार्केट का 100% ट्रेड डॉलर में होता है, जो आप अभी न्यूज देख रहे हो कि किसी ने रूबल में ट्रेड सेटल कर लिया है, ऑल ऑफ दैट इज नॉनसेंस. फॉर एग्जांपल, इफ इंडिया पेज इन सम अदर करेंसी, what will the recipient do with that currency? For example, if Saudi Arabia receives yuan from China, what will it do with yuan? Will it receive currency notes? What will it do with yuan in its bank account? Nothing. It has to go back and import stuff from US or trade with some other country and again pay in US dollars. So the global settlement is still happening in US dollar, and whatever little is happening in other currencies is too small to make an impact. Second and more important thing, global trade functions through SWIFT banking system. US can track every single dollar which has moved across the globe from any account in any country, because कोई भी डॉलर पेमेंट की सेटलमेंट जो है वो यूएस में रिपोर्ट होती है, right? So that is a potential nuclear option for US, which no country can pass. Third and more important stuff, ट्रेड तो सिर्फ 10 से 12% है ग्लोबल कैपिटल फ्लोज का. कैपिटल फ्लोज 90% है दुनिया, जैसे कि एफआई मनी है, इन्वेस्टमेंट फ्लोज है, एफडीआई है. नन ऑफ दैट हैपेंस इन एनी डोमेस्टिक करेंसी, राइट? ऑल ऑफ दैट हैपेंस इन यूएस डॉलर. एंड the reason which I did not share initially, which is the most important reason, there is no other country in the world right now which has a consumer class which can take the trade deficit that the US can take. So it's a chicken and egg. आपके पास इतना बड़ा कंज्यूमर क्लास इसलिए है क्योंकि आपके पास रिजर्व करेंसी है, और रिजर्व करेंसी को प्रोटेक्ट करने के लिए इतनी बड़ी कंजम्पशन क्लास है, तो वो इंपोर्ट करती है पूरी दुनिया से. क्या कोई और कंट्री इतना बड़ा इंपोर्ट कर सकती है और वर्ल्ड इकोनॉमी को ड्राइव कर सकती है? अभी तक तो नहीं है और कोई कंट्री, एज ऑफ टुडे तो नहीं है. सो मे बी दिस विल अकर इन द फ्यूचर, maybe I don't know 10 20 30 years from now, but abhi hum wahan pe nahi hai. So you can maybe ignore these noises for now, but that does not mean that dollar will strengthen. Even in 3 months ago I wrote a report saying that dollar has peaked, that on real basis it is at a 20-30 year high, it should fall, right? So that is how I look at it. Any other particular question you want me to take? I can give you my views on that.
Yeah, so one is, there is a question on correlation between interest rates and equities. That is one. And second is, let me check, get few questions from here. So let's take this question and then we can take few questions from
Sure. Sure. So So first thing is that कि ऐसा, so there are a lot of statistical model analysis which is done कि ये how do equities perform in high interest rate scenario, है ना? Saurabh, I am audible, right?
Yeah. Yeah, sorry, I had got this.
Yeah, should I go ahead?
Yeah, please go ahead.
No problem. So ये जो डेटा कोरिलेशन होते हैं ना कि जब इंटरेस्ट रेट बढ़ रहे थे तो इक्विटी मार्केट ने कैसे परफॉर्म किया, जब घट रहे थे तो कैसे परफॉर्म किया, दे लैक कॉन्टेक्स्ट. So for example, I'll give you data points where interest rates were rising and equity markets were booming. And I can give you data points where interest rates were rising and equity markets were also falling. So it is a context which is very, very important. The question is, ये high interest rate होते क्या हैं? Are they high enough? What is high interest rate? I think so. These are qualification numbers which are, so I'll give you one example. Currently, a repo rate is 6.5%, which is equal to what was in August 2018 when Urjit Patel raised rates to 6.5%. Governor Urjit Patel faced a lot of brickbats. I remember very clearly in, I think, September or October policy in 2018, every single commentator on the street said that he made a mistake by not raising interest rates enough. He should have raised rates to protect the rupee. I remember very clearly. Our repo rate was 6.5 at that point in time. That was a peak rate. He did not raise rates after that. And today at 6.5, nobody even cares कि हमारा rate कितना ऊपर आ गया. क्यों? क्योंकि yields इतने ऊपर नहीं गए हैं. 10-year yield is still 735. अगर आप 2018 में बैठे होते तो 6.5 के ऊपर आप 150 बेसिस पॉइंट्स या उससे ज्यादा पे कर रहे होते. आपका रेट अभी 8-8.5% होता. आपका डबल ए पेपर 12-14% होता. आज डबल ए पेपर 9.5 भी नहीं. So the context is very, very different. What is the context? Why are the rates going up? So there are two reasons for rates to go up. One is when the market senses fear. When it fears कि आप मेरा पैसा नहीं लौटाओगे. So it demands higher rates from you, which is a premium for your credit profile. That is a scary scenario. जब ये होता है तो मार्केट गिरते हैं. जब भी रेट्स इसलिए ऊपर जाते हैं कि आपकी ग्रोथ अच्छी है और ग्रोथ की वजह से इन्फ्लेशन आ रहा है, the market also go up. So that is the qualifier to make. एक और सिनेरियो है जहां पे आपकी ग्रोथ खराब होती है लेकिन कमोडिटी प्राइसेस ऊपर चले जाते हैं फॉर सम रीजन, सप्लाई शॉक, and central banks make the mistake of chasing it, right? And that is where the economy slows down, and it slows down to such an extent that market also falls. So these are very different kind of scenarios. All of them are there with high interest rates, right? But market reacts very, very differently. So you have to assess it कि हम किस वजह से interest rate ऊपर जा रहे हैं. I think that is the most important scenario. अगर if rates are going up for the right reasons, you should be bullish about it. You will have a positive correlation between interest rates and equity markets. If they are going up for the wrong reasons, तो वो खराब होगा. Or maybe in the next few editions of Netra, I'll publish what I call inter-market analysis. I haven't spoken about it. There are ways to analyze equity markets when you look at, for example, a ratio between commodity prices and bond prices. It can give you great indications how equities should move, right? In a very broad sense. उससे आपको assessment मिल जाएगी कि is the interest rate hike good enough or bad enough? So those indicators can be achieved. Sorry, Saurabh, you had also highlighted another question which I missed.
No, actually, I lost connection in between and that chat is gone. So I just asked people if they can repeat their question. But there was one more question more on the learning resources. Like if somebody had to start learning and many people don't understand all these metrics, what are some of the learning?
जिसको मैं बोलता हूँ tourist dollars. What is the kind of foreign institutional capital which is roaming around the world, which goes in and out of various markets? You know, जिसको हम FI इंडिया में बोलते हैं पैसा, उसको टूरिस्ट डॉलर. तो ग्लोबल उसका जो नंबर था वो तकरीबन 800 बिलियन to 1 ट्रिलियन था प्री कोविड. वो नंबर बढ़ के 5 ट्रिलियन हो गया, right? So that speculative capital has become so large that factor will not easily go away. It will remain there for some more time. So that is how I see it. So it has become, there is no alternative. There is now an alternative fixed income, but the totality is still very large. The global liquidity is still very large for us to, remove that or ignore that. It's still very, very large. Yeah, Saurabh is back.
Yeah, thanks, Sahil, for continuing with this. So I think there are a few questions on the learning resources if somebody wants to learn all this and apply in market. And there was a question regarding your book, which is coming in March. So what is the name of the book, and how we can get it?
No, it's not coming in March. So we are just trying to write it. It's a tough job to write a book, and maybe we'll be able to finish it in a 6 months period. So learning resources, I'll tell you, Saurabh, I read non-investment books a lot more than investment books. And as I told you, I share most of the books that I'm reading, I share it on social media, right? I keep on putting them there. And the thing which works for me is to read diversely, read from various topics. So some of the books which I find very, very intriguing and interesting that I've read recently, one is say Chip Wars, which is again a very good book to understand the semiconductors industry history. There is a podcast called Qualcomm on Acquired, which I think somebody on the social media, told me to listen to. I think this book and that podcast is a great combination to understand this sector. There is a book called Deep Medicine, a good book to understand AI and new technologies. There is a book called The Song of the Cell, which by Siddhartha Mukherjee. Again, a great book to read. If you have not read his The Intimate Gene, you should read both these books put together. So there are so many different books that you should read and understand various sectors. So what I try to do is I read sciences so that we know what's happening in that particular field, and then understand कि इसका business implication क्या है. So for example, जैसे मैं आपको एक एग्जांपल देता हूँ, अभी हम लोग जब सेमीकंडक्टर्स के बारे में सोचते हैं तो लोग उसकी प्राइसेस और डिमांड सप्लाई सोचते हैं. बट मैं क्या सोच रहा हूँ कि कोई भी टेक्नोलॉजी बेस है आज, चाहे वो सॉफ्टवेयर हो या सर्विसेज हो, उसको हार्डवेयर चाहिए. अब जो उसका हार्डवेयर है, उस फर्म के पास क्या एडवांटेज है? उसके पास थर्ड लेवल ऑफ मोमेंटम है, क्योंकि जो सॉफ्टवेयर कंपनीज हैं दे रिलाई ऑन एनेबलर्स, राइट? जो सर्विस प्रोवाइडर है उस पर रिलाई करते हैं, जो इन टर्न रिलाई करते हैं हार्डवेयर प्रोवाइडर्स पे, राइट? और हार्डवेयर प्रोवाइडर्स किस पे रिलाई करते हैं? इक्विपमेंट मैन्युफैक्चरर, राइट? वो इक्विपमेंट मैन्युफैक्चरर के पास इतनी डीपली इंटीग्रेटेड मार्केट है कि वो कहीं जाने नहीं वाला जल्दी, राइट? तो मैं वहां पे जाके देखता हूँ कि वहां पे वैल्यूएशन कैसी है. What is the business cycle happening at that point in the cycle? Can I benefit from it? So that is how you look at these sectors and read these books. There are certain websites that you can go and refer to. जैसे एक book है जिसका नाम है Predicting the Market, which is written by Edward Yardeni. Edward Yardeni, you could say, is probably like a guru which I look up to. I have tried to understand how he works and how he creates his data, and I actually called Yardeni to India in 2021. There is an online interview which I did with him. So Edward Yardeni की website है yardeni.com, वो free है. उस पे जितना मैंने data आपको बताया उसमें से 60% data you can access it for free on his website, which is a great resource. There is another website which many people don't know, which is called macromicro.me. It's a Chinese website. macromicro.me. You can create any macroeconomic chart for free. They have already created everything for you. You just have to click it. तो जितने global data point आप सोच सकते हो वो already chart बना चुके हैं वहाँ पे. And by market, by asset class, by anything that you can think of, economic indicator or anything, you can just draw it. So sometimes when I have to do a presentation and if I have nothing, I open that website, I can create a presentation within 2 minutes, right? So this is again another important source. Third source is follow an economic calendar. Whenever data comes out, go and find out how that data is collected, who collects it, what do they ask, and then see what type of market does it influence. अगर आप ये 1 साल तक कर लोगे, 3-4 quarter, आपको उस कंट्री की इकोनॉमी के बारे में सब कुछ मालूम चल जाएगा, आपको कोई बुक पढ़ने की जरूरत नहीं पड़ेगी. I think that is the best exercise. Whosoever joins me in my team as a youngster, I make them do this exercise. Whosoever is tracking the macroeconomic cycle, and they get a good sense of what's happening in the economy. I think these are enough data points. The primary tool that I use is reading a lot of books.
Thanks a lot, Sahil, for sharing. And to everyone, so the recording will be available. And also, there have been too many insights and too much of information. So I will go through this recording later on, and I'll make my own notes and I will share with everybody. If we can take one last question, I think Dhruv has raised his hand.
Yeah, please.
Dhruv, please go ahead. Please unmute and ask.
Hi, Sahil.
Hi.
So, of questions. I missed the first part, so sorry if I'm repeating this. On the inflation things that we are seeing, I'm looking more micro, and you would also believe that in the investing world we have to look at probabilities specifically of different scenarios. My question revolves around the whole inflation thesis globally. At around how things are playing out. So while we are looking at the inflation trajectory, which is probably peaked out for the time being, do you have some probability? Will you assign some probability to inflation making a comeback sooner rather than later? Because that really changes how you would allocate and your time frame for allocation. Because especially on the debt side, if people are looking at taking a long duration call, that yields will come down drastically. But if you have a 2-year perspective, and if you know that inflation may make a comeback, you assign a decent probability, and it might not be the right call to take.
Right. So first thing is that will I assign some probability? Sorry.
Just as your views, and if you assign any probabilities or your views on it.
Sure. So I think there is a probability that inflation can make a comeback. You cannot rule it out. Market may never say never. So there is nothing which cannot happen. Everything can happen. So I can paint so many scenarios. For example, about 2 months ago, internally, I gave a presentation within the groups showing that how a geopolitical issue can simmer in the Middle East and cause oil prices to go to $200. It was a fictional exercise, but I have many reasons to believe if we do that. For example, I could do that session for you, and I can really make you believe that it can happen, and it's actually possible, right? But predicting those outlier events is not possible. But can some of them occur? They can, of course. It's a very high probability event. When will it occur? I don't know. So if some of those events occur, there is a possibility that inflation could make a comeback. Secondly, can it make a comeback because of central bank and fiscal issues? That I think is a low probability event, right? So looking from the trend of what's monetary policy is doing and what fiscal policy is doing, that is a low probability event. But there are some other simmering issues which can cause inflation to make a comeback, which have not gone away, and they are still there. Having said that, I think there is a meaningful reason to make a duration call that you buy long duration bonds, because this monetary tightening cycle is much more benign than all previous tightening cycles. And I have proved that with various charts across different netras. I'll give you 3 reasons. One, with interest rate hikes, our yields have gone up the least in comparison to all past cycles. In this cycle, we have the least tightness in liquidity. In fact, we are at liquidity surplus today. Third, our corporate bond yield spreads are the lowest for any tightening cycle that has happened in the past, which tells you that when this cycle turns, you will have a longer benign phase than you had in previous cycles, right? So it makes sense to have higher accrual by playing duration now than for waiting for it to go down and then play duration. So I think this is the right time.
Got it. So you rightly pointed out on the fiscal and the monetary pace of the inflation, and that is where you have been highlighting on the commodities versus the consumer producers versus the consumer thing. So more on the producer side, and this is more related to the inflation. Do you track their inventories or the supply side of these commodities? Because there I see some sort of challenge in terms of no new capacities being added. And if demand makes a little bit of comeback, 1-2% sort of a growth, then he might have that whole inflation. That is what I'm probably tracking around, not from the fiscal or the monetary you
Yeah,
have
I
any data
understand.
points, you might just say that, no, it's fairly, under control, or no, maybe there is an inventory or a supply side problem that we might be proving up.
So Dhruv, I have tracked these markets for a very long time and I've studied them for even longer. So I have looked at oil prices from the time that when the first barrel was taken out of the ground. I have studied those trends, prices, and production numbers from that time. And I can tell you one very clear fact that prices makes the narratives. It's not the other way around. And if you go back to 2006 and see what Saudi Arabia's oil minister is saying, you will be shocked. He said that oil production can never go above 86 million barrels per day. That we have hit peak oil, production has peaked forever. It can never go higher. And there are newspaper cuttings. I have shared it on social media also. And I was there live. I have seen that phase. I was a trader trading oil and I believed him. And you know that the production is 101, 102 today. And it was even higher just a few years ago. Second and more important fact, people compare today's capex capacity to 2011, 12, 13. And if you were to take that data, and there are 3 Chinese companies, PetroChina and 2 other companies, and if you remove their capex numbers, today's capex numbers are higher than even that phase. Okay. So those comparisons are a little out of place. That's what I feel. And second and more important thing, where is the demand? OECD countries' demand for oil has a minus 50 basis points CAGR over the last 20 years. I have put that in one of my reports also. If you remove India and China from oil demand market, in the last 20 years, 66% of oil demand incremental has come from India and China.
Yeah, that I recollect. You had put it in one of these.
Yeah, so I think there are significant reasons to believe that you may not actually need a significant amount of investments to maintain where you are today. And plus, at the margins, you are already having an energy transition, right? And they are real scientific reasons to believe. So energy is a very close subject to my heart. And I'm sorry I did not mention it before because we are at the fag end of the session. But if anybody wants to ever understand economics and markets, they have to read energy markets. And there are a few books you can read. Whatever Vaclav Smil has written, he's written about maybe, I don't know, 40 books or whatever. It's a very important read. And read whatever EIA and IEA publishes every day. BP Shell reviews every year. So oil market is something that I look and read on a daily basis. Energy market, so to speak, not just oil. Yeah.
Sahil, one last question, and probably, we can connect later on personally also.
Sure.
Your Tango, if you can, or probably you can cover in Netra or in some other place on a Twitter thread, something regarding Japan, and its importance in the whole scheme of things with regards to liquidity. This is a long question, so later on you can either put it on a thread or you can do a small spaces or something. We can connect again over the webinar or something. But it's important. I believe there is a lot of importance to the liquidity, to the emerging markets, risk assets specifically, to what is happening in Japan, and it can have some sort of implication. I don't know if I'm right, I'm wrong, but if you can try and explain about how things are playing out there, because there's a lot of tango between USD, Japan, the kind of risk assets plays, the money that Japan is printing over the last 10 years and so.
Sure, I think I can do that. I actually coined a term called Japanification of US some time ago, and it's a very common term which is used now. But I'll try to write about Japan, and I have tracked that market for some time, but I'll put some comments on that.
Got it. One last request. If someone wants to study what has happened in the US economy market, so the 60s, 70s, 80s period, any few books if you can recommend that one can read about how things have played out, because there are a lot of macro asset allocation things that have happened in the 60s, 70s, 80s, with regards to gold and everything, geopoliticals and things like that.
So there are I think books which are, for example, Barbarians at the Gate. There are books which are written about scandals. Those are, I think, are very, very useful to read. There are books about Michael Milken. If you just Google them, you will find out there are a number of, I think, about 2-3 books which will give you a very good roundup of what happened in 1980s. Another thing is to read books by Alan Greenspan and Ben Bernanke. Both of them have written very comprehensive books. Age of Turbulence is one book by Alan Greenspan, which I think is very insightful. And there is a book called Firefighting, The Economic Crisis. Again, a very, very useful book. And then you can pick up any Joseph Stiglitz book. He's written a number of books on financial history. And then there are 2 books by Robert Shiller on US housing and US economy. So I think all of them, if you put them together, I think it's a good enough compendium to understand the market.
Okay, thank you, Sahil. Thanks for the thing. And thank you, Saurabh, for allowing me.
Thanks, Dhruv, and thanks a lot, Sahil. I think we exceeded the time by 25 minutes. So thanks for being generous and spending time with us. And it has been so insightful that I think I need 4 or 5 hours to see it again and again, and then making my notes and then share with the community. So thanks again from the whole community for spending time with us.
It's a vast topic. I think even if you pick one topic, we can have a 2-hour conversation on it. That is how the vast this universe is. So thank you very, very much for inviting me, and thank you for patiently listening to me.
Thanks, Sahil. And just one more thing to the community members. So yesterday, I think, Sahil, you released a video on, I think either Netra or Tathya, one of them, how to
on Netra, yeah.
read it. So those who are interested in understanding that in detail, I think those videos will be a good place to again go and understand it in detail. And then
I've been doing a monthly sort of a webinar. And right now I have maybe 400-500 people. If you want to ask me questions, you can come on that webinar. I'm open to answer.
Sure. Thanks a lot, Sahil. Thank you.
Thank you, guys. Thank you. Good night.
Thanks, everyone. Take care.